Dear listeners, welcome to Mark's Morning Call. Real time, real markets.
In today's podcast, we're going to take a look at airlines. Richard Branson, the owner of Virgin Atlantic, was once asked, how do you become a millionaire? His answer was, become a billionaire and then buy an airline. So today we're going to have a deeper dive in terms of why would you invest in an airline? What's going to make you as the investors think, yep, this is a company I want to own because I think I'm going to see significant share price appreciation. Well, just a little bit of background. So the thing about airlines is there's some good investable names, large companies, very liquid stocks that are easy to buy. So we've got IAG, which is the parent company of British Airways. We've got our old friend Ryanair, which even if you don't want to travel on it, you may want to still invest in the stock. A competitor of Ryanair, but smaller, but also, as we'll see a little bit later, a bit cheaper. And also on top of that, you've got the kind of hybrid companies like Jet2, which are providing airline services, but also do package holidays. So before we get stuck into some of the specific details of some of the companies, what I want to do is just to step back for a second and think about airlines, both in terms of common factors that affect all airlines, and then some of the more company-specific factors, which may well mean that I'm not really that interested in all airlines, but there are specific characteristics of some of them, maybe performance, maybe the business segment they're in, or maybe just valuation, that means that I want to invest in that company. Alternatively, if I have no strong view about a particular company, I might just allocate some of my money to each of the different airlines that I can invest in. So let's say take a look at some of these common factors. The first thing about airlines is that they're known as capital intensive, by which we mean that you have to invest significant amounts of money to put the assets in place in order to be able to run your business. So if you think about it in terms of an airline, nice and straightforward, a Boeing 747 has got a list price of 400 million. British Airways have got 300 aircraft. And so you can see that there is a substantial amount of money that needs to be put in place in order to be able to actually even get going in that business. So this idea of capital intensity is really central to thinking about performance and investment within the airline industry. And maybe that's why Richard Branson decided that that was the way to lose $1 billion and become $1 million. So the second factor, which is worth bearing in mind about airlines, is that they have what's known as very high fixed overheads. So by way of a definition, or the way of thinking about that, is that it doesn't matter whether I do lots of business or a very small amount of business, my costs and overheads pretty much stay the same. So why is that in the context of airlines? Well, if you think about what are the major costs of an airline, the most obvious one is fuel. So jet fuel fires up the aircraft and gets it across the Atlantic or somewhere in Europe. And for pretty much all airlines, then that represents 30% of their costs. On top of that, they have charges for landing, and they also have significant amount of staff costs. Now, each of these costs are fixed in the sense that if I take off from Heathrow heading to JFK in New York, then whether I've got 10 people on the plane, 100 people on the plane, or it's absolutely rammed and full, the fuel costs are going to be pretty much the same. And so my revenue, obviously with 10 passengers, is small, but my fuel costs are still very, very large. And so this idea of fixed overheads means that capacity utilization, how much of the plane is full, is really a very important concept. The other key concept that we really need to explore in terms of this is also the yield, i.e. how much on average is a passenger on a flight paying. Often I find that trying to think about the overall profitability of a business and therefore kind of the investability of that business is best served or kind of usefully looked at by just taking one example. So we're going to take a look at both the costs and the economics of British Airways flying from London to New York. Now, you remember we mentioned a little moment ago, we've got this big lump of fixed cost, principally comprised of the fuel, the staff, pilot, cabin crew, etc., plus the handling charges at both ends. And for a London New York flight, that comes out at about 300,000 US dollars. So we know that whether that plane takes off with no customers, no passengers, or 236, which is the capacity of the aeroplane, then it's going to cost around 300,000 US dollars. So if the plane is absolutely full, not a spare space in sight or a spare seat in sight, then the total amount of revenue that we would expect British Airways to generate would be the 236 passengers multiplied by the average fee or the average fare per passenger. And in terms of a transatlantic flight for British Airways, that comes out at about 1,900 US dollars. Now, you might think, wow, that's a lot, but remember, you got first class where people are paying up to 9, and obviously the cabin class or the world traveler where they're paying significantly less. So if that all comes out, British Airways make a nice 450,000 US dollars of revenue. And so as a result, they're making a very nice 150,000 US dollars per flight, giving a nice fat operating margin of around 30%. Now, if we do the same numbers, but let's say that the plane is only 50% or half full, then you can see that our revenue then comes out at 225, and then we're left with a loss of 75,000 because our fixed overheads, as we discussed, stay pretty much the same. Yes, a few less meals. Yes, a few less tins of beer or glass of wine. But 99% of those costs, the staff, the fuel, then they're going to be incurred however many people are actually on that plane. Now, what you should observe about this, and this is really important because once we extrapolate this to the company-wide level, we are talking about very, very large sums of money. So in the two little scenarios that we had, passenger numbers fell by 50%, and we went from being highly profitable to making a loss. So the profit didn't go down by 50%, it went down dramatically and indeed turned into a loss. The other important point that comes out of this little example is really the measurement about how full does the aeroplane need to be in order for British Airways to break even. And I think if you do the numbers in this particular case, it's about 65%. So as long as they can run their airplanes at 65% capacity utilization, then they're about break even. Now, if we look at British Airways right now, they're running at capacity utilization about 85%, and hence they are currently in quite a profitable position. The other side of the equation is obviously the yield or the price. And so here, as you can see, we've assumed that it's 1900 based upon data. So if we can drive that up, then clearly that means that we become even more profitable and we could actually run at a lower level of capacity utilization, or what's known as load factor, in order to make sure that we don't lose money and at least break even. Now, this whole area of yield and capacity utilization is in itself a huge topic, not just for the airlines, but for any capacity constrained business. And you may remember there was a huge hoo-ha with the Oasis concert this year, or with the pricing earlier in the year, where they used what was known as dynamic pricing, which then caused a whopping great row and so on. Anyway, airlines have been using dynamic pricing for an awful long time, and it has had a dramatic effect on the profitability of airlines. So dynamic pricing, I'm sure you've all come across it, is where you go onto the website for Ryanair or for British Airways and you get quoted a price at a particular date. And then you look at the same price or the same flight the next day and it's half the price or twice the price. And so what all of these airlines are doing is constantly monitoring supply and demand. How much demand is there for a particular flight on a particular day, and then pushing up the price. And then obviously where they've got spare capacity, they're lowering the price either to kind of push travelers to those days where there isn't much business going on, or just to make sure that they can fill the aeroplane. So in the example we used about profitability a moment ago, where we said 1900 at 100% and 1900 at 50%, then that's probably not going to be true in reality. So if a plane is 100% full and they know it's going to be 100% full, then the likelihood is that that price is going to be pushing up and up and up as the departure date comes near. Likewise, for a half-empty plane, then the chances are that they won't even realize the 1900 yield or price, and so as a result, that loss will become even bigger. Think about dynamic pricing, think about how it affects other industries, and also think about it in the context of AI. It seems to me that there is going to be significant opportunity for airlines to make use of AI, particularly in areas like dynamic pricing. So the ability to be able to analyze customers, analyze supply and demand conditions at any point in time means that optimum pricing is going to be easier to achieve than under the current situation. So let's get on to the investing part of the session and look at a couple of the companies that you might think about buying. What I'm going to do is I'm going to focus on two, Ryanair and British Airways, which, as I said, trades under IAG, International Airline Group, because it also includes Iberia Airlines and a couple of other smaller airlines as well. But British Airways is the major driver, as I mentioned before. Let's start by looking at the factors that are probably driving the performance of both of the two companies. So demand for travel, absolutely key, both in terms of capacity utilization, which we've discussed in great detail, but also then driving up those yields, which with the help of AI and further improvements in dynamic pricing could push yields very much higher. The other factor that's important, and we haven't mentioned it to date, is the oil price. So what we did mention was that about 30% of the costs of the airline are wrapped up in fuel costs, and obviously that is driven by the cost of oil that makes the fuel. So at the moment, we're looking at oil prices around $60 a barrel, significantly down on previous years. And so as a result, if that can remain at these lower levels, it has enormous implications in terms of the cost base for both of the two companies. The other thing I just mentioned here is that both of the two companies actively hedge. What do I mean by that? Well, instead of buying oil today, what they do is that they buy oil at today's prices for use in 1 year's time. And so there's a degree of safety for the next year that even if the oil price goes up, then they're still paying today's prices. And about 70-80% of both British Airways and Ryanair oil is hedged. If you want to make a distinction between the two airlines, then what I would look at is really whether you prefer the British Airways full service model, flying long haul, short haul, business first economy, where obviously the yield per customer is significantly higher than for Ryanair, coming in at $237 per passenger against Ryanair of $80 per passenger. But remember again, with British Airways, then that 237 is an average covering huge variations. So you've got sitting at the front of the plane, first class, it could be paying 9,000-10,000. Sitting at the back is significantly lower. Whereas with Ryanair, then pretty much the $80 that per passenger that they're charging, there's far less variation. So you might consider, where do you see the big growth drivers? Do you see them in long haul? Do you see them in short haul? Do you see it in holidays? Do you see it in business? These are all things which are worth investigating in making your investment decision. Either way, both of these companies are now pretty profitable. The highest operating margin in the industry is Ryanair, but closely followed by British Airways, so both pretty robust in that respect. The other important thing whenever we're looking at investment is obviously valuation. And the key thing around this is that there is a significant advantage in IAG or British Airways valuation compared to Ryanair's. Right now, Ryanair's are trading on about 15 times earnings per share, so P of 15 times, whereas IAG is trading on about 7 times. And so if you want to be in airlines and you can't really see a compelling reason why Ryanair is going to do much better than British Airways in the future, that value differential looks pretty compelling as far as I can see. Just to wrap up, not to be unfair to EasyJet, EasyJet in some ways is more like Ryanair than British Airways, mainly shorter haul, bit more expensive, so yield per passenger tends to be higher than Ryanair. Nothing like as efficient. So there may be a compelling investment case for EasyJet on the basis that if it could run itself as efficiently as Ryanair, plus with the extra kind of premium that they get on their ticket sales or ticket prices, then that might be something worth looking at as well. Hope you enjoyed the podcast. Go and have a look at some airlines. Full disclosure, I'm an owner of British Airways shares. It's been a great performer over the last 12 months. I'm sticking with it for the time being, so let's see what happens. Thank you very much indeed. Happy investing. Bye.
Lastly, the legal note. This podcast is for informational purposes only and does not constitute financial advice. Views are our own. Do your own research and seek professional advice. Investing involves risk, and past performance is not a guarantee of future results.